Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market had an extremely narrow week this week. Focus really was on the FOMC meeting and the healthcare bill. Republicans squeaked by as they avoided another failure by really one vote. They won 217 to 213, got that through the House of Representatives. Well, if they would have lost one more vote, they still would have passed it. But two more, well, it would have been 215 to 215. And then it would not have passed. So it was really close, and give credit to their whip for having the right count, because they would have never put it through if they didn't really believe that they had the votes. I'll spare you all of the rhetoric that we're hearing out there, but certainly the Democrats have been well armed with a lot to criticize in this bill. You know, for me, I'll just keep saying you got to help those that need help. They can't help themselves. And throw the rest to the free market and let the free market dictate the prices. And I think that they would solve the answer that way. But no, they are way too stuck in trying to protect their jobs than trying to do what's best for the country. Stock market really narrowly mixed. I mean, moving really small. As a matter of fact, seemingly less than a 1% range as we get towards the last hour of the day right in here for the whole week. I mean, that is really small. S&P 500, small gains in there. And the NASDAQ, similar action going on. Tiny move in the Dow Jones Industrial Average and the RUT, as that's the Russell, as they have small declines. Really, the Dow was weighed down by the oils. Materials were all weak this week. We're going to talk more about that coming up in just a moment. And hurting the Dow Jones Industrial Average towards the end of the week is IBM as it moves down, as Warren Buffett comes out and says that he unloaded 1/3 of his stock in IBM, and that is certainly not a vote of confidence for IBM, so IBM takes a downward spill. Bond market, bonds move down more than 1 point for the week as the FOMC comes out and says, well, you know, they're going to still stay on course, tightening in here, and that the fact that we only grew 0.7% in the first quarter, that's transitory. Well, they didn't even predict this 7% gain, only 7% gain in the first quarter, so they never get it right. I mean, unless it's by accident. So they say transitory, which means temporary, but I still say they don't have a clue, and they're the ones running the economy. The dollar, it was really moving based on weaker bonds, so the bond market moving down helped the dollar move down and the euro currency move up. Of course, we have the French elections coming on Sunday of this week, depends on when you're watching this show, and for that election, everybody is pretty much sure that Macron's going to win. He's the centrist, and the far-right Marine Le Pen is very likely to lose. She's down about 60 to 40% right now on the polls. That is That's not very Trump-like, actually, and it's not, very likely she's going to get anywhere. Of course, the euro currency has been pricing in that win already, so that's not likely to be that much of a surprise. We've been long the euro on a short-term setup, as we call it in here, and it's probably going to be okay into the beginning of the week, but don't be surprised if there's kind of a, sell the news type reaction for the euro after maybe an opening burst. If there's a big shocker and Le Pen wins, well, that is going to upset the markets in a big way, but that would be a massive shock if that happened. Gold and silver, they move down in a massive way. We're going to speak more about that in just a moment too. But gold down from some $40 on the week, silver down in a collapse. For the third week in a row, down about $1. That's after 2 weeks previous, down about 65 cents a week. This has been just a nightmare. And oil moves down also about $3 for the week, and it was down $6 for the week in an overnight panic as we saw a flash crash moving it down to $43.76. And I'm going to show you that chart in just a moment. So we're in this huge downside move in commodities, and the stock market is largely ignoring that move. And I don't know how much longer it can ignore it. Well, it's had a healthcare that it was looking at, and the Trump agenda, which now they're thinking maybe is on board, even though there's like no chance that the healthcare bill is going to pass anything like what it looks like right now as it gets into the Senate. And then, of course, the French election, which everybody is calmed down about right now. But there is something that I think is really important to pay attention to. And here's why. Commodities have been dropping big. You can name it: collapse or rout. Some are even crashing. It seems like the source of this is China. They've had a huge amount of stimulus. They had big growth around 11%. It's fallen down to about 6.5%. There's been, during that period, so much massive overbuilding, condos that sit empty, malls that are sitting empty, that they are really trying to do something about that now. And the shadow banking there, that's all of those sources for credit that were kind of behind the scenes, they've been the source for a credit bubble there. And now China wants to crack down on that. They want to avoid the perils of Japan and the United States, where you fix nothing and you kind of kick it all down the road. Well, Japan's done that for more than 2 decades, and they got stuck into a deflation because of the way they handled that with all that QE and qualitative easing, buying up all the stocks, doing everything that does not cure the problem. So China is acting to crack down right now on what they call the irregularities of the financial sector. So they're putting in stricter rules on the shadow banking, which has been this big source for that credit stimulation, and really trying to crack down on the outflows out of China. A lot of that was going on through Bitcoin, and they have tried to stop that. But at the same time, there appears to be at least a short-term liquidity crunch going on, as their interbank rates at times have spiked quite high. In fact, at one point overnight, like 11%. So it's not really as orderly as they would like it to be, and I think that's what's really affecting the commodity markets. You want to take a look at what orderly looks like. Take a look here at iron ore. Man, look at this. This has been just an absolute debacle in there. Now, iron ore traded up, close to 200 at one point, and then it got crushed back to around 60. It now has moved after bouncing back to 90, back down to 60. This week has been a massive, 12% decline on the week. There was a down limit day, and then on Friday you could see down 5% again. This has just been an absolute collapse. And that means that the commodity markets are getting ready for some big slowdown. When you see that, I don't follow rubber much, but I read a lot about rubber. Here's the rubber market, and this thing over the last few months has collapsed also from like 345 all the way down near 200. So there's been some massive move down in there. Take a look at what's going on just in this last couple weeks in the commodity markets that I look at. Here's the light crude chart in there, and I want you to see this big collapse. Now, the bottom of this is my slim ribbon momentum indicator right over here, so you'll get an idea of momentum. Here's where it lost its positive momentum right there, and look at this move down from 54 all the way down to 45. It traded down under 44 overnight in a flash crash, so just a huge decline there in light crude that's been just incredible. Take a look at gasoline. I mean, oh my goodness, look at that ski slope decline as momentum has gotten very negative in there, and in the other metals. I mean, they just have gotten so weak. Take a look at this silver move. Would you look at that, 1860 down to 1620 in that huge move into negative momentum. That is a $2.40 in just a matter of 3 weeks. That is your industrial metal. Take a look at copper, or they call it Dr. Copper, and that had, look at that plunge just over the last week as it trades up near 270 and then moves down under 250, and now clearly no negative momentum. This thing has not been able to establish any positive momentum all the way back here. That's since February. So incredible negative momentum that you see in there. Take a look at platinum /PL, another one that has just collapsed into negative momentum. Big down move in there of about $100 in just the last 2 weeks. Just these incredible moves. And how about the currencies in Australia and in Canada, which are so connected to natural resources? Here is the Canadian dollar as huge negative momentum as that goes into a plunge. And the Aussie dollar, the same thing. I mean, just big negative momentum as that goes into a plunge. Just incredible movement that we see in there as you get a good look at what's going on in the commodity markets right now. Man, you can, this is, I think, really all about China, and this is going to hurt Chinese growth. I mean, that's just simple. When you look at it, that you don't have to look at the mathematics to be able to see how dangerous this is. Pretty soon, we're going to hear the word contagion. And as we see these mining stocks break down, and we see all of these other metals break down, the patterns that I'm looking at in these intermediate commodities are just awful. The stocks are breaking down also in the materials, metals markets, and the energy markets. Think about that word contagion. I think we're going to hear a lot about it, and I think that this big break in the commodity market is a huge tell. Yeah, right, I'm a poker player. It's a huge tell, and there's something out there. So I think that 7/10 number, maybe that's what the tell is, that the U.S. is really slowing down, and all these commodity declines mean something, well, really important. Don't be surprised if the Fed has to stop abruptly on what looks like their steady course. I don't think so. All right, so let's look at what has happened in the stock market this week as we look at our 60-minute chart of the S&P 500. The gray area, of course, is the overnight trading, and the white area is the trading during the regular trading session. And what we can see in here is, well, how about this? Choppy sideways week, not a whole lot going on as you look at that, as the stock market, well, is, as we said, mixed. with S&P 500 now up just a little bit on the week, but the rest of the indexes, not really doing well either, and a couple of them down on the week. So here we have Monday. Well, the market tried to get a pretty good up move in there. It rallied overnight, as you can see, and then managed to put on an upside move in there as the world markets were on holiday on Monday. The consumer spending was flat. That was a warning. Canadian mortgage, they have a crisis that, we haven't even hardly mentioned in here. The debt ceiling deal, they make a deal all the way and kick it out to September, which I absolutely can't stand. I think the debt ceiling is meant to hold back debt. But they don't seem to understand that at all. Bitcoin moves to 1425 as there certainly is some speculation going on there, and you got to really wonder about this inflation-deflation tug that's going on. As you see that price in Bitcoin move up. And President Trump says he wants to break up the big banks. You can see that brought a sell-off right over here when he said it as the banks moved down, but then the market recovered in there and moved up. There was nothing much at all here on Tuesday as factory orders came out, the best since 2011, so there was some strength in there. And the FOMC meeting started, and everybody was just chopping and waiting for Apple earnings and the Fed. Apple earnings, of course, came out, and there was some downside movement here early on. ADP is up 177,000, which was, okay, it was in line. It's almost all service jobs. I mean, that's really one of the problems, is that there is no manufacturing going on. The stocks were weighed down by Apple earnings, but then Apple recovered, and that helped the market come back. Fed comes out right over here. No surprise, no change in policy at all. No mention of their balance sheet at all. As I said, they call the slowdown as transitory, which I don't think so. So what we have in here is just a choppy, slightly up day that goes on in there, and just slightly up recovery, actually, after the Apple earnings come out, and a slightly down day in there for the stock market. The collapse in the commodity markets just is going on right over here, and the stocks basically ignored it overnight, but then comes late in the day, and they really started to move down. As I showed you, iron ore, rubber, I mean, those had horrible days in there. Gold, silver, copper, I mean, they all dropped pretty significantly. Macron wins a debate, everybody says, in a big way, and Republicans, they said they had to vote on health care, and they really did. And stocks just chopped but end firm in there. Friday, here we are right now, is we only have about an hour to go in the day, and everything has been choppy up in here. There was a big flash crash overnight in oil and the commodity prices. That's what that move is right over there. But as you could see, it recovered back, and oil actually recovered about $3 from that panic that went on in there. Payrolls come out pretty strong at 211. U3 is at 4.4. This is so interesting. I mean, we've got this huge commodity crash going on. Economy at 0.7% growth, and the U3 at 4.4. U6 is 8.6, which is the best number since 07. And stocks, well, they are just chopping their way up in here. And you can see this upward trend right there. I wonder if and when that's going to break, if that brings some real selling coming in. So overall, we'll just call this a choppy sideways week, and not a lot to be excited about when you see that. There's your calendar for the coming week. The earnings slowdown is here. I mean, we've gotten most of them coming out. The ones that I'm watching pretty carefully in here are, some of the retailers still to come out. Kohl's here before the opening on Thursday. Nordstrom's in here after the close on Thursday. This one is JCPenney is going to be interesting to me because, I think that they're in massive trouble, and I think they're going to be down. The stock is falling under 2. I keep saying that because I think they're going to have to declare, the bad word, the big B word. So we'll see if there's any tip of that as we see that in the J.C. Penney earnings that are coming out on Friday. So that's it basically for the opening segment. We're going to get right back in here at it, though, as we look at our best stocks and worst stocks for the week. All right, do this every single Friday where I pick out what are the biggest movers for the week in the stock market, and then basically I look at 320 stocks and I do cycle analysis on those stocks. And that when we get into this segment is when I really have the opportunity to spend some time showing you what is, I think, a very unique style of analysis, and that is cycle analysis, where I look at the rhythms of the market. Essentially what this is a visual depiction of money flows as money moves in and out of the markets, and cycles are measured from low to low, and we call that the cycle length. You can see in here in the best stock of the week, which is First Solar, which moves up 17% on the week on strong earnings. They guide up. The analysts really like it. The group is flat, though. We've been waiting for an upturn in this group. This stock, it's still trading at a pretty huge PE, like in the 50 area, and you can see in here these cyclic patterns. If you look at these spikes right over here, they point to the important lows. That's these declining periods right in there, and what that shows you is that there are these repeating lengths. You can see that right there, and this low, which we just had, was pretty much right on line. So you can see the cyclic formations as it rallies and then sells off a little bit to that low timing. It rallies a little bit, right, makes a new high, but then it breaks down, so it declines through that cycle timing. It does the same thing here in a second wave to the downside and a third wave to the downside. You can see that now you get this big upward spike, and when you get that big move early, only 2-3 weeks into the rally, that's really a decent sign. So that says that 25.56 low is very likely a very important low. Of course, we're $9 away from it right now, so that's not really that bold of a call, but we would think that this is a stock that's in pretty good shape, and we would be a buyer in there if it got some pullback. REGN, that is Regeneron, that's the next one we're going to look at. Their sales came out slightly missing, but what we have in here is a very strong pipeline. That's really what they were pushing in there, was the quality of their drug pipeline, and that's why the stock really got a strong boost and is very strong. Now, note in there we have drawn in the inverted head and shoulders pattern with a slightly upward neckline. It's really a double bottom that you can see in there. So either way, when you see the double bottom or the W bottom right in there, the measurement is the distance right in here projected once there's a breakout right in here. So it's got to get above this level over here and break out above that neckline for it to be positive. But basically we'll call this a pretty decent looking chart as it gets a powerful 10% move on the upside this week. So that is a look at Regeneron, REGN. Take a look at one we all look at a lot, right? TWTR, which is Twitter. And this one has got some interesting news in here. I mean, I keep saying they don't go anywhere until they figure out how to really improve this model. And the stock has been moving down basically on disappointment that nobody was going to buy them out. But you could see in here the beautiful cycle rhythms in here also as we look at these last 4 cycles right there, and the blast off from absolutely the perfect spot as far as the low goes. Now, this is really a good pattern. What makes it a really good pattern, besides the fact that it's already moved up from 14 to about $19? Giant move percentage-wise, right? But getting above this level right over here, you can see that last cycle peak, that's a good sign. And that gives a pretty good sign that this period going on in here has been a major base being built and something good is happening. Now, we made a point recently that we think this resistance zone is going to stop it for now unless somebody comes by and takes them out. So we're kind of looking for this kind of a pattern in here, but we think a major base has been built, and that the fact that they made a streaming deal with Bloomberg that really lifted this stock 8% this week, well, there's probably more of that coming out, and we're probably going to continue to see some good things happening for Twitter. So we're going to look for this to be a tough area, 19.5, 20.5 in the stock, which isn't much higher than it is right now. But I think that overall, we're going to see that stock be in pretty decent shape. And I wouldn't be surprised to see it much, much higher later in the year after it does some digestion of what's going on right now. Interesting pattern in Coach, C-O-H. Take a look at that right here as it moves up 8% on the week. Their earnings had a tiny small beat and their sales missed. I think that this upward tick in here actually is insane, but the upside pattern has been positive. Well, here's the cyclic patterns in here. You see this big pattern right in here? That was perfect. Made up of 3 smaller cycles. You can see that right in there, and absolutely perfect timing to the bottom. Then it makes this bullish cycle right in here, and then this is our window of where we think the low timing is, and then blasts off on the upside. They're real excited about closing 140 stores so far, and more stores going to be closed. You know, it's cost cutting, but this company is just deteriorating like all the rest of retail. And I don't see this rally holding up. You could see this resistance right over here at about 43.75. It got up to 43.83 and then started to roll over. So I'm not excited about that one. I think that Coach is still going to have some problems going forward. And you're going to hear about more store closings, and you're going to hear about more trouble with earnings, I think, going forward. Yeah, it likes to do okay in the fall as you get towards Christmas. But Christmas this year is going to be more and more of online purchases and not so much in the malls, which are just absolutely being decimated. Let's take a look now as we look at HLF, Herbalife. This in here, you could see our cyclic patterns in here also. We did not give it this much credit. You know, we thought where it turned over here was going to be basically the peak right here on Herbalife. Their earnings missed, but they came out with really strong outlook. And now what we're looking for in this pattern is just a corrective period right in here. So if you look at the corrective periods, that's these cycle periods, the bottom half of them, and that's where we are right now. So it's likely that there's going to be a correction here in Herbalife, and that would take you about a month's time, and then we'll probably be able to get some better upside after that. So we're going to look for a pullback in Herbalife coming up in these next several weeks. The next stock that I want to talk about is an interesting one. Triple D, that's 3D Systems. This stock has been in a very unusual pattern, something that we don't see that often, and that is a consolidation that's lasted for a year. Take a look here as we look at this pattern, and you can see as it got down to like $6 over here, this big decline that went on here was a lot of fear about, well, not being able to make a lot of money because there was hubs being set up where you could just use other people's software and then get a not have to buy all the equipment. But there's such a huge growth in the uses for 3D printers, especially in the medical area, manufacturing area, that if 3D can get on board with that, it'll have a huge breakout and a big spike. Generally, what happens when you get into these type of patterns is that you see this move from like 6 to 19, that's $13. Once you break out, you get get another $13, which would take it up close to $30 right over there. You have beautiful cycle pattern in here, essentially. As you see, this was a negative pattern. You could see the declining right in there, but then you got this nice cyclic patterns going right in here, and the bottom formed, and then that next rising phase, look, it gets right up to the top there. If you get over that area of about just over $17, especially over that 1760 number, you could spike on the upside. Now, look what happened on their earnings report. Their earnings missed, but you have this great pattern. Look at this. The stock sells off on earnings. See that big tail right there? Happened on Thursday. And then it moves up pretty sharply in here. There's something really nice when you look at that pattern. And man, I wouldn't be surprised to see a breakout coming soon in here and a pretty strong upside move in Triple D. A couple more stocks that I want to look at in the best of the week, and that is the airline stocks. They have improved patterns in here, and that is based on the fact that, well, oil's getting really cheap, and that's the end of their, that's the most of their input costs. And here's we have a slight revision in the pattern in here. That's when you see these dotted purple lines, and you see that low as it came right in over here, and now we're in this rising phase. You can see that green shows you you're in a rising phase and turning up only 2 weeks into this advance. Now, usually following a red zone like that, you don't move up to a new high. It's about a 1 in 4 probability, but you're getting some pretty strong move in there in Delta, and I gotta say, it's not a bad pattern when you look at that. United Airlines is the next one we're going to look at. You can see, and they're both up about 6% on the week. And this one looks to me like it's going to go to a new high, and you could see this actually is a much stronger pattern than Delta was. As you could see, the stair-step upward move going on in here, and this likely to get up into that resistance zone. That zone is up between the area of 79 and about 82. It's now trading at 75, and I think it's a pretty high probability that we're going to see it move up into that level. So that's some pretty good strength that we see as we get improved patterns, and some of these other airlines are looking pretty strong also, and that certainly is that they're benefiting from the weakness that we see in oil. I don't think it's from strong growth. I think it's from lower costs based on the oil price. So that's the best of the week, and now we'll take a look at the worst of the week. There's some tech stocks that have made up the worst of the week. Now, it's no secret that we have a pretty good upside move going on here in the NASDAQ, which is loaded with technology. But when you see that, it's really a narrow group of stocks that has really been lifting the NASDAQ, the FANG stocks in particular. And we've talked a lot about recently about that narrowing of the breadth. Go back and look at the last week's show, and you'll see that where we discussed that. But in this case, we're looking at some stocks that are weak in the technology category, and overall the semiconductors have been really strong, and now there's been some cracks in the semiconductors, and there's some warning in there. Take a look here as we look at AMD, and look at that stock. Look at that pattern in there. Based on what we're seeing in here, this is pure destruction, down 25% on the week. Earnings came in line, but their revenues missed, and analysts are all over this one on the downside. Actually had some warnings in here. You could see this is actually an engulfing pattern. This is a dark cloud cover, as you saw that top forming. And here you could see the cyclic action right in there. I'm just kind of tracing it out for you, and the big breakdown, which has about maybe 2 or 3 more weeks to go on the downside. Important 34-week moving average. Take a look right in here, and you could see this big downward crack, negative momentum as it moves down through that 89-day moving average, which has been support. This is pure destruction in there. It is oversold right now based on the projection oscillator, but we do see this stock as a stock that has more downside in there. So if AMD gets a bit of a bounce, I think it's a sell. Akamai, AKAM, take a look at this one. This is in in the cloud category. Now, we talked about IBM, and we'll show more IBM in just a moment as IBM moves pretty strongly to the downside. And let's take a look in here at Akamai, AKAM, and look at the big break. Now, you can see the timing. It says about another week or two on the downside, but again, this is pure destruction. And when we look at the daily chart, you can see a similar occurrence in here, but this one had some warnings before. As you see, this earnings report brought this what they call as a bear kicker, as it closes up near the high and then has the big gap down, gets under the 89-day moving average. That's one full quarter ago, and that was your warning, and here's your big revenue miss again, and more on the downside. This one getting way oversold, and I would expect that we're going to make that low in the next week or two, but then I would say it's a broken stock, and I'm not looking for a lot of recovery. And you could see our projection in there, right? It only looks for a modest recovery and then moving more to the downside. While we're looking at these stocks, let's take a look at IBM, which is now also in the cloud category, where Warren Buffett says he's getting out of some of his stock, or he did 1/3 of it already. It's down almost 3% on the day, and really extending down in this what we call yellow warning zone, where it's in a corrective period. The fact that it's gotten past the timing on these two bars in here that we're showing, that's a bad sign, and we think that IBM, outside of some minor upside possibility in there, is going to continue to be in trouble and move to the downside. You can see how long our projection is out into August on the downside, which is a lot like what we think is going to happen to the stock market. Take a look at TSLA, Tesla, and this is an interesting stock as they come out with a bigger loss than expected, but their revenues doubled, and we're looking for a choppy time in it actually here over the coming months. There's all kinds of bullish analysts based on their ability through robotics to get a better production done, and they expect to be all on time on the Model 3 and all that. But stock has already had a massive upside move. We're actually looking for a chop in here between 295 and 330 and there 325 over these next several months that you can see right there. So I think that the big move is over. That engulfing pattern is a pretty good warning there as we look at Tesla. Down about 3% on the week, and these earnings reports really don't seem to mean anything. Take a look in here as we look at Mosaic, MOS, down 13% on the week on a big miss. This is a very ugly pattern. We're looking on the downside in here for a decline to continue out into July. So that's a bad look there, as we just see that as a very negative pattern. And it's been negative, so somebody knew how bad that miss was going to be in Mosaic. We've talked a lot about commodities in this show. Steels and materials stocks, they go down pretty sharply, just as we've seen here in the actual commodity prices. We'll just look at a couple of them in here, a few of them, just so you get a sense for the technical breakdowns that are going on in here. Take a look at AK Steel. This is a good representation of the type of analysis that we do and why it looks like there's a long time still on the downside. So this period in here was the bottoming period that we expected. You could see as it came down and made the low here. The rally only comes up for about 2.5, 3 weeks, and then it breaks that low. That's what we call a cycle violation. We're looking for declines out through June or July. That dotted line is the DBB, which is the base metals. So really a bad violation that we see there and an ugly pattern. FCX is the next one we're going to look at, and here we have a breakdown also in Freeport-McMoRan. This is a copper gold stock and really looking sick as we look at that, and also declines out into July, August is what we're looking for in there. Take a peek at Alcoa down 6%, FCX down 7%, AKS down 8% on the week. This is an absolutely horrible pattern, and we're looking for declines out to August in this one also. Silver stocks, they move to the downside and break down. Pan American down about 3%. AG, First Majestic, also down pretty significantly, down about 7%. And basically, there's warnings all across the board on these patterns, and we do not expect to see rallies to be able to hold up in these metal stocks at all based on the patterns we're seeing now. We're expecting gold and silver to make some temporary bottoms and get some moves in there that are a little bit better, but overall these patterns in here are worrisome. That is the worst for the week. We're going to come right back with a short-term view for the stock market for the coming week. All right, this is our short-term view for the coming week. Don't forget, we're running a special right now. We have just a beautiful website that has over 250 videos on there that you can learn from. If you're a new trader, a beginner looking at the markets, trying to learn technical analysis and many other things about the market, or if you're an experienced trader that looking at more advanced things, we have this unbelievable assortment, 9 different categories of videos where you can learn from us. You see me use a lot of tools here on these charts, and you can learn those tools in our Tools for Text category. You can learn lots of things about trader issues in our Trader Psychology category. We review a lot of different sectors of the markets in our Stock Sectors category. We mix these up. Every Wednesday we show you Futures Speak, where we look at 24, 25 different futures markets, and of course the Stock Index Futures. That is one of our most popular video segments, and we have, like I said, many other ones in there where we look at IRA possibilities, and we look at big picture analysis. Just great stuff. Plus all of our rankings and setups on the best traded stocks that there are. You can have all of that analysis, all of those videos, everything, where you get this amazing amount of information. And try that out for 1 month for $43. That's half price. And you don't like it, just cancel it, and if you want to stay, you can stay. No problem with that at all, but you're going to do a ton of learning in just the next month, and it'll all be available to you. So write me an email, slim@askSlim.com, and you will have the opportunity to learn from everything we have to offer. I think it's just an amazing offer. So send me an email, and I'll be glad to send you our special link for that special we're running. All right, let's take a look at the stock market. SPX is what we're going to focus on in here. What we had talked about last week was that we thought that there was going to be a dip towards the middle to the end of the week, and then it would start to move up again for the S&P 500. We actually had the shape of that pattern pretty much perfect. What we didn't have was that we thought that it would get a little bit deeper on the decline. We thought it would get down to about 23.73 or lower, and it got down to about 23.79. So we missed that by about 6 points. So we get, partial credit for that one. Definitely on the shape of the pattern, which is always so important to us where we learn about markets. So we had expected it to get down into this green support zone right there, and you could see it got down to very close to that slim ribbon, that 13-day moving average that's coming up. Let's take a little closer look at here, and you can get an idea of the cyclic patterns that we are looking at. And you can see that this pattern we're looking at right in here is this pattern, and we had this drawn this way, and that it would then tick up towards the end of the week. So we had the pattern spot on. We just basically missed the dip, and that's because nothing happened this week, as you could see, this amazingly narrow week. So what we're looking for in the coming week is a failing, we'll call it. Yeah, we're expecting the possibility that we could get a little bit higher, but we think this area just below or just above this all-time high is going to give the market trouble. So you could see the high here right over there at 2400.98. We kind of think that, right where we are right now, about 2395-ish, but 2405, 2410, we think that's about the best we can see it do, and then move down. This low that we made right there at around 2379, 2380, that's now an important cycle support that we call it. I think that it's going to break that number fairly soon and give us a bear signal. If it does that, it will accelerate to the downside under there and complete this pattern. So what we're looking for over the next week is kind of a rally and then fail. It's either going to fail sometime in the middle of the week or fail sometime at the beginning of the next week and then break underneath this key number and accelerate to the downside. That's what we're looking for. Up, get into this resistance zone just above that all-time high number, and then give it up and then start to get sold and move to the downside. Maybe it's all about what we were talking about in the early part of the show when we were looking at the commodity problem that we're seeing out there and the messages from that. Basically, I think that the slowdown in the U.S. and the slowdown that's going to come out of China and this big break in commodities is actually a strong message, and that the growth just isn't going to show up here, and that it's going to be difficult to get this Trump agenda done, and before you know it, the market is likely to be moving down in a pretty sharp way. That is our show for the week. I hope you've loved it. Don't be afraid to send me an email and let me know. You're watching this on YouTube. Make sure you give us a thumbs up. And if you give me a thumbs down and you don't like it, make sure you leave a note in there and let me know why. I always want to make our show better, and I always want your feedback. And I'm always wishing you great trading.